Welcome back to another segment of Arizona Mortgage News. We're here with Mike Goblet, United Mortgage and Financial Group. Good morning, Mike.
Good morning, Matt. How are you?
Not too bad. Got another cool, wonderful day here in Arizona in the month of June. We're going to talk about how to choose the right rate and program for your mortgage. Is that correct?
That's exactly, I thought, would be a very good topic as part of our series of the 10 things to and terms to really know about a mortgage. So it's not as simple as one may think.
I'm sure it isn't. And you're going to enlighten us.
Well, I'm going to try. So, all too often, too many people simply look at a mortgage as a loan they're getting from the bank. But it's actually much more than that. It's actually designed to be, or should be designed to be, a financial management tool to help them manage what is probably, in many cases, their biggest asset, and that's their home. You wouldn't go to a financial planner and say, hey, I've got some money and I want to buy some mutual funds. Pick something for me. You would sit down and you would discuss what are your short-term goals, what are your long-term goals, and then buy the appropriate products that match your goals. Well, a mortgage is actually much the same.
Makes sense.
So while a 30-year fix is considered the gold standard of the industry, there are a variety of other considerations that should be part of your decision before you even choose what program to go with. Okay. First, you should really decide, is a fixed program the best program for you? Now, ARM's got adjustable rate mortgages, got a bad rap a few years ago coming out of the meltdown that we all went through of the mortgage industry, but it got it for the wrong reasons. What happened is the industry got involved with just getting to the lowest rate available for whatever period of time, because housing values were going up so fast. Everybody said, well, you can just refi out of this when it's time to redo your, when it comes to readjusting for you. Well, we found out that one, home values quit going up, in fact, retreated, and ARMs were a bad product. Now, that because of why they got into them, okay? But ARMs were designed for a specific purpose and goal, and if you follow for that, they're a good item. Part of that decision is really based upon how long are you going to be in that mortgage, not just the home, but that mortgage. For instance, you might be moving, you're just in for a job relocation, and within 5 or 6 years you're going to be moving out. Or maybe you're planning on refining after home improvements are done. You're taking money out now to get cash and then going to look to refi after you've improved the value of the property. So there can be times that ARMs are good value and actually can save you thousands of dollars over that period of time.
Makes sense. Now, is there a rule of thumb with ARMs over fixed as far as number of years?
No, it really just gets into your own specific scenario and having somebody show you all the options, including about what may happen when your loan goes to readjust. In fact, on the other hand, we recently had a client that was planning on buying a second home here in Arizona from Florida. And they were going to move here, but not for 3 years, and then sell their home in Florida, use that large chunk of cash to pay down the principal on the home they were going to buy and put down less here than they might have otherwise. So we considered an ARM. But here's where it really gets into more strategy. We also have a lender that will allow a client to do a one-time recast of their loan while keeping the same rate. So bottom line, this client, after they sold their home in Florida and now had the cash, were able to put down a large chunk, reduce their principal balance, have the loan recast at that new lower loan amount, and still stay in their 30-year fix.
That's very cool. So you get one recast in a loan? Is that how it works?
Well, no, this lender allows it. So you may go to a lot of banks and they'll go say, no, what are you talking about? Well, we only have one lender that I'm assured that will allow that. So again, that's one of the advantages of being a mortgage broker over a banker in many instances, because I have other loan options available to me and different lenders that have different guidelines.
It's good to know you.
I hope so. So once you've decided on whether a fixed or an ARM is the right, the next question is, what term should you use? How many years? Now, if this is a purchase and you know you're going to stay in the home for a long time, a 30-year fix becomes the obvious goal if your lowest payment is your objective, because 40-year mortgages don't exist anymore. So if you're looking to manage that that term or that payment, 30-year, and that's why it's the gold standard or the one used. But there's some other decisions to make as well. For instance, say, I know I want to pay this off at a faster rate. So should I take out a 20-year or a 15-year or a 10-year? And the answer is maybe. Or if you want to build in a safety net, let's take out a 30-year, okay, but make a 15-year payment. On a $200,000 mortgage, if you did that scenario, it would probably take you 15 years, 8 months approximately to pay off that loan. Yet you left yourself the real advantage of, if for any month or period of time you needed to make a lesser payment, you have that ability. So again, it gets into a strategy. Okay.
Makes sense.
We also have a lender that will allow us to choose any number of years that you want to do. 21, 17, 15, 12, whatever it is. So if you're doing a refi, for example, and you don't want to start over again or add years to your loan from where you are, we have a lender that will allow us to do the term based upon the exact number of years you want to do.
Very nice. I haven't heard
Finally,
that.
how do you choose the best rate? It's not as easy as just saying, what is the rate today? As we talked about in other videos, there's a lot of things that go in pick besides daily changes in rates. There's things like your FICO score, your loan to value, even the loan amount that goes into the rate. But probably the most impactive, or one of the most impactive, and the least understood or explained is YSP, yield spread premium, or the term banks use, service release premium. This is the amount of the rebate or cost, buy down, that a specific rate provides. It is how you get to such things, terms you hear in mortgages like no closing costs, no origination fee, we'll pay for your appraisal. It all gets involved in that. And yet the majority of banks will never tell you what all your options are with that YSP and RSP or SRP. I actually provide the lender's pricing sheet and you choose.
Seems like an honest approach.
There's no right answer. It gets involved to your individual circumstances in a lot of this. But candidly, like any financial tool, if you make the wrong decisions, it can cost you thousands of dollars. You need to treat your mortgage like the financial management tool it was designed to be. Don't just get a quote from a lender without an in-depth discussion of the options available to you depending upon your scenario. Actually, even on my card, it says I'm a mortgage planning specialist. I'm not just a loan provider. I will ask the questions and help you decide what program's best for you.
Makes sense.
So,
well, Another interesting segment. It really does pay to evaluate a lot of those options. Do you get many people that go with funny years like 21 or 25 or 15?
Not many. Most people, I make it offerable to them, but not many take advantage. They just kind of want it rounded out because that's what they're used to dealing with. But it makes a lot of sense that if you're in 21 years of a 30-year mortgage, 30-year might get you a new lower rate, but starting over again adds years onto the mortgage, which can offset some of the benefit depending upon how long you're going to stay in that loan.
Makes sense. Well, Mike, if people want to follow up with you, have some questions, what's the best way to get in touch with you?
Well, you can call me here at the office at 480-503-3533 or call my cell phone direct at 480-220-2329 or email me at mike.goblet at our company initials umfginc.com.
Well, excellent. Well, thanks for another great segment, Mike. I think we got a round of applause for you.
Well, thank you, man. That's appreciated. Thank you very much. I'm speechless, obviously.
Speechless. Until next time.
Okay. You have a good day.
You too. Bye-bye.